Wall Street just placed a major bet, and it's not on the S&P 500. Cerebras Systems, the AI chip company that went public in late 2024, is seeing its shares climb sharply after multiple top brokerages initiated coverage with bullish ratings. We're talking about price targets that imply double-digit upside from current levels. In a market where the Federal Reserve's interest rate policy is squeezing valuations everywhere, one sector keeps defying gravity. And right now, all eyes are on AI silicon. In this video, you'll discover exactly why Wall Street brokerages are backing Cerebras and its AI chip strategy, what that means for the broader stock market and the S&P 500, how interest rates factor into this high-growth story, and whether an AI-focused ETF might be a smarter, safer way for everyday investors to gain exposure. Stay with us, because this story touches every layer of your portfolio. Let's start with who Cerebras actually is. Most people have heard of NVIDIA. Far fewer know Cerebras. Founded in 2016, Cerebras built the world's largest computer chip, a wafer-scale processor called the WSE, or wafer-scale engine. The WSE-3, their latest generation, contains 4 trillion transistors and delivers performance benchmarks that directly compete with NVIDIA's flagship H100 GPU clusters. The difference? Cerebras claims its architecture can run large language model inference, that's the process of generating AI outputs, up to 20 times faster than comparable GPU setups. That's not a marketing claim. That's a published, benchmarked figure that has caught the attention of hyperscalers, government labs, and now Wall Street. Now here's where the stock market story gets interesting. When a newly public company receives simultaneous initiations from multiple major brokerages, that is a signal. It means institutional money is getting ready to move. At least 3 top-tier firms have initiated coverage on Cerebras with buy-equivalent ratings, citing the company's differentiated chip architecture, its growing list of enterprise customers, and the secular tailwind of AI infrastructure spending, which, according to Goldman Sachs research, is expected to exceed $1 trillion cumulatively over the next several years. $1 trillion. That number puts Cerebras's current market capitalization in a very different light. But let's talk about the elephant in the room: interest rates. The Federal Reserve has held its benchmark federal funds rate in a restrictive range as it continues to monitor inflation data. High interest rates are the natural enemy of growth stocks. Here's why. When rates are elevated, future cash flows, the revenues a company like Cerebras might generate 5 or 10 years from now, are discounted more aggressively in valuation models. That pushes prices down on paper, even when the underlying business is strong. This is why the S&P 500's technology-heavy components have faced persistent valuation pressure over the past 2 years. Yet AI chip names have largely held their ground. The reason is simple. The demand signal is so strong, so immediate, and so capital-intensive that investors are willing to tolerate rate risk in exchange for exposure. It's a calculated trade-off. Risk exists, but so does conviction. So what does this mean for the S&P 500 broadly? AI chip momentum has become one of the primary engines keeping the index elevated. The S&P 500's top 10 holdings, companies like Microsoft, Apple, NVIDIA, and Alphabet, collectively represent over 30% of the entire index's weight. When AI infrastructure spending accelerates, it lifts not just chip makers, but cloud providers, data center operators, and software platforms. Cerebras going from a venture-backed startup to a Wall Street-covered public company is one more confirmation that the AI capital expenditure cycle is real, durable, and deepening. Every brokerage initiation is essentially a vote of confidence in that cycle continuing. Now, for everyday investors watching this video, here's the practical question. Do you buy Cerebras directly, or do you get exposure through an ETF? Let's be honest about single stock risk. Cerebras is a newly public company. It is pre-profitability. It operates in a fiercely competitive market where NVIDIA commands roughly 80% market share in AI accelerators. Concentration risk is real. A single earnings miss, a customer cancellation, or a broader risk-off move driven by Federal Reserve commentary could send shares down 20 to 30% in a single session. That's not speculation, that's the historical volatility profile of high-growth, small-float tech names. So what's the alternative? An AI-focused ETF spreads that risk across dozens of companies in the ecosystem: chip designers, semiconductor equipment makers, cloud infrastructure players, and AI software firms. Funds like the Global X Artificial Intelligence and Technology ETF, ticker AIQ, or the iShares Semiconductor ETF, ticker SOXX, give you diversified exposure to the same AI spending wave without betting everything on one company's execution. Diversification doesn't eliminate risk, but it does let you sleep at night. Here is the bottom line. Cerebras is a legitimate, technologically differentiated company operating at the frontier of AI compute. Wall Street's brokerage community is now formally on record with bullish outlooks, and that changes the institutional investment landscape. Against a backdrop of elevated interest rates, a resilient S&P 500, and a $1 trillion AI infrastructure build-out, the AI chip sector remains one of the most closely watched corners of the stock market. Whether you invest directly or through an ETF, understanding why this story matters is the first step to making an informed decision. This video is for educational purposes only and is not financial advice. Always consult a licensed financial advisor before investing. If you found this breakdown valuable, hit the like button right now. It genuinely helps this channel reach more people who want clear, data-driven financial education. Subscribe to YieldWire so you never miss a market update. And check the description below. We've linked to resources that can help you research AI ETFs and track Federal Reserve rate decisions in real time.